Alrighty, we're back. Hope you've been well. Hi everyone. I think you can see me okay, hear me alright. Hey Patel, how you doing? Hey Jumarinas. Good to see you all. Hey Stefan, good morning. Hi Jimmy. Hey Angel Case, good morning. It's been a stop-start kind of week. It has been a stop-start kind of week. Monday was super quiet. We had a session on Tuesday. We had a live stream on Tuesday. Wednesday I was off on a holiday or a short break, one day public holiday, and we're back again on Thursday, the 23rd of May. So back again, hopefully back into the swing of things again, with hopefully a little bit more movement on the markets. Good morning, Nav. How are you doing? Hey, good morning, Untraku. Chuku, how are you doing? Sorry if I'm messing up the name. Okay, let me see. Everything is working good. All right. If you're new to the session, again, do remember to drop a message, say hi, let me know where you're joining us from, and for all the regulars, thank you for bearing with me and thank you for joining with me on this daily market analysis. Good to have you all again. And wherever you are watching, hey Andrew, how are you doing? Good morning. Wherever you're watching from, on whichever platform you're on, YouTube, Facebook, LinkedIn, Twitch, Twitter, or X, do drop a message and say hi. Good to have you with me. And if you have any questions at any point in time, please feel free to put it into the chat and let me know. And if you can help me out massively, do remember to click that like and subscribe button if you haven't already. All right. Hey Lindley. Hey Solomon. Good morning. How are you doing? Alrighty. So I hope you've had good trades. The market hasn't moved that much, but it has moved. This week has been pretty much a bit of an off day-ish kind of thing for me. So I haven't had that many trades or haven't looked at it that much at all. But hopefully today we do have, or we had the RBNZ with their rate decision yesterday. We had the CPI for the UK yesterday. I'll talk to you a bit more about that shortly. This morning, early this morning, we had the US FOMC meeting minutes release, a little bit more hawkish than expected, bringing about a little bit more movements than expected. Is it going to sustain? Possibly, but there are levels that I'm watching. So I'll tell you more about that. And then today seems to be a PMI day, if I remember correctly. I know there's a whole bunch of stuff. It seems like it's a PMI day today, so we'll look out for that as well. Okay, so with all that said, a quick disclaimer. Before we get started, any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product, so please remember that your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. With that said, take that away. Good morning, Diana. How are you doing? Glad to see me back. Glad to have you back with me on this session again. Alrighty. So what has happened since the last time we spoke? On yesterday, wait, let me see. Before that, we had CPI. Okay, so we talk about Tuesday night, we had the CPI for the Canadians, right? CPI for the Canadians. It came out pretty much as expected, slightly lower. So trimmed CPI came out as expected at 2.9. It was 3.1, revised slightly upwards to 3.2. Came out at a 2.9, while median CPI was a bit lower than expected at 2.6. It was expected 2.7. With this news, with this CPI slight slowdown for the Canadians on Tuesday, what we saw, right, on Tuesday right there, was that weakness as we had expected, right? So we were thinking that it was going to come down, test that support level, and bounce up. It did that exactly. On release of the news, it pushed up, broke that trend line, and pushed higher. So if you move this right across to Tuesday on the news, you would have had that trade to the upside. So anyone got onto that, do let me know. On the USCAD to the upside, there was a good 63 pips move up. Although it did not drop as much as I had drawn, but it did come down, tested support, and push back up. So that was because of the news for the Canadian CPI number. Diana did this trade, fantastic. Did you hold on to the whole move for that 63, or did you get out within 2 hours at 50? That's actually a very interesting, that can be a very interesting thought process, right? Did you hold on to, or 40 pips, right? Or did you get into that trade, get out at 40, 50 pips within 2 hours? Or did you hold on to it and get out on Thursday? So this was Tuesday's trade, on Thursday at 64. And that question to everyone as well, right? Would you prefer a 40, 50 pip trade in 2 hours, or a 64, 65 pip trade in 2 days? It sounds relatively straightforward, but sometimes the answer can surprise us, right? Would you prefer, let me put that out, would you prefer 40, 50 pips profit in 2 hours, or 65 pips in 2 days? There you go. Question for everyone. All right, so Diana says depends on your risk management. Lindley says 40 in 2 hours, 40 in 2, 40, 50 in 2. You know, for me, if I was watching that, if I wasn't trading, but if I was watching that, it would definitely be 40, 50 in 2 hours, because anytime, again, I think I've said this many times through all our different daily sessions, is anytime you're in the market, you're exposed to risk. So it's always get in, get out, 40, 50. You never know that spike back down, or that retracement back down, could come down and hit your stop as well. Right, so whenever it goes out, and I can almost guarantee you that it was way outside the Bollinger, right, way outside the Bollinger, so I would have always got out, and that would have even been a 40 pip move to the upside, got out, and that's it. Okay, so simple question, just something to think about for you guys. Now let me take that away. That was the CPI for Tuesday for the Canadians. And then on to Wednesday, yesterday we had the RBNZ with their rates decision, this time keeping rates on hold at 5.5%. Not a surprise, no big surprise there, keeping rates on hold at 5.5%. The statement, the rate statement that accompanied, right, just looking at that, official cash rate to remain restrictive at 5.5. Decline in inflation reflects parts of this. Let's read the whole thing. I like that, Diana. I'll come to that shortly. I like that. Decline in inflation reflects lower inflation for goods and services imported into New Zealand. Consumer price inflation has declined from 30-year highs in many advanced economies. Services is receding slowly, and expected rate policy interest rate cuts continue to be delayed, right? There you go, that one, that line. Expected policy interest rate cuts continue to be delayed. That's the one line that we look out for. What else? There was one more line I was going to highlight, is that, where was it? There. Includes the most recent fiscal and mini budget. So the mini budget giving a little bit of uncertainty while the signaled lower government spending is currently annual consumer price inflation, annual CPI, remains above the target of 1 to 3%, and components of domestic services inflation persist. Right? So with that, what we saw on the Kiwi on release, right? We were expecting a push up, thinking that it was going to come down and push up and break that level. On release of the news, it did go up from 0.61 up towards 0.6150, so a good 50 pip move to the upside before that dollar strength push it back down again. Right? So we did see that push up, this reaction on the RBNZ news release, pushing it up to the upside. Unfortunately, did not close above this 6140 level for that continuation higher. Okay, so we did see it push up before coming back down again. That was the RBNZ with their rate decision. In fact, I did a video about a short one couple of minutes video on the RBNZ rate decision. It was on YouTube. Let me see, where is it? Give me 1 second, I will find it out. So you guys can watch that as well. That one. So I did a RBNZ rate decision rate aheads and all that. So you can watch that on my channel. So if you haven't already subscribed to the channel, you are missing out on info. You'd have to remember to subscribe to the channel. And then following on from that, we also had yesterday the CPI number for the UK. 3.2, expected 2.1, came out at a 2.3% for CPI for the UK, which resulted in not a lot of movements on the pound. You see it shot up from 1.2710 up to 1.2760 and then came right back down again. Out of the Bollinger, came right back down. Still looking for that push, for it to break that support and push to the downside. All right, so it popped up, right? It popped up because inflation didn't slow down as much as expected. So it popped up, and then after that, it came back down because of the dollar index dragging it back down. So that was all the things that happened. Overall, it was a 50 pip range kind of couple of days, and that's why I haven't bothered too much about it. I'm not super keen on 50 pip horizontal range. I like to see breakouts and continuations, so that's why I check in, nothing much, and I'm out again. I wouldn't bother to, I'm just looking at that, right? Didn't bother to try and get into any trades. With that, then early this morning at 2 a.m. GMT plus 8, we saw the FOMC meeting minutes, right? FOMC meeting minutes, again, as usual. I didn't think that the meeting minutes was going to bring about too much, but it was viewed as a bit of a hawkish meeting minutes. In fact, I have it open here. It was viewed as a hawkish minutes right here. Primarily because they were talking about how inflation, although it slowed down, it's still higher than what the target level is, and also that it is increasing slightly now, right? Over the interperiod, implied path of Fed funds rate increased remarkably. Market participants placing lower odds on significant policy easing in 2024 than they did before March. Right, so it looks like they're pushing back further, again further pushing back that timeline for a rate cut scenario for the US, for the FOMC. Total and core PCE price inflation were both projected to move lower this year relative to last year. though the expected pace of disinflation was slower than in the March projection, right? So this again pushes out that timeline for a potential rate cut, thus viewed as a little bit more hawkish, and that's why we saw that move at 2 a.m. It popped up from 104.78 up towards that resistance of 105, now sitting just below that 105 level. Okay, so like I was telling you right at the start of the session today, possibly looking like more upside for the dollar index, but it does need to get past this 105 level. It's breaking past this 50% level. All right, it's breaking past this 50% retracement from this downward move. So this, in fact, I don't need this anymore. Take that away. Okay, it's breaking past this 50% level, or it's at that 50% level. Does need to break past this horizontal round number resistance at 105. Trend line from the top down to the most recent point needs to break past this area. I would say that if it clears past this, breaking above that trend line, we could see it go further up and come back into that range between 105 and 105.50. Okay, so take those away. That's what's been happening in the markets since the last time we spoke. Now, let me check the comments. Diana says, in my opinion, I would secure 40 pips and make break even and hold to see if it reached, just for my sake of studying. For me, there will be times where I would test, and there will be times where I would, test to study and test to just quickly realize it. So I would, in fact, go, 40 pips, close it out, put a line there, make a mark of it, and say, okay, if I held on to it, where would it have gone? But that kind of have a I don't know what's the word, an impact on the thought process, because if it goes up and hits your take profit, or what would have been your take profit level, then you're very likely to be reinforced in that mindset, right? We're talking about this. It would have been reinforced in your mindset that it could have hit your take profit level, but if you move this to break even, then you would have hit your break even level right there, and then it would have pushed up. So I would always close out the trade, put a line there, and then review it to say, okay, if I got in here, it would have hit my break even, I've got out at break even, I've lost 40 pips of potential profit, and then it could have gone up to my my take profit up there. Okay, so there are times to trade and close out and make the profit, and then I would leave the testing and studying as a more theoretical side after the trade has been closed. Does that make sense? But that's a good process as well. In your case, with 40 to 50 in 2 hours, Jimmy says hitting 40 pips is like hitting a jackpot for me. Come on, I'm sure Jimmy has actually highlighted many trades that has gone a lot higher than we would have projected. So I'm sure you've done a lot more than 40 pips before. Diana says, agree, psychologically may affect you if you see that it reached your initial target. Yeah, and you would end up placing a lot more benefit or value when it hits your target, and not so much if it goes against you, right? Because there's no, you've already closed out the trade. So I would leave, there are times to trade and times to test. Okay, then today what we have a whole bunch of is the PMI numbers, the Purchasing Managers Index, to be released and to be released, right? At 3:15, just about 6 minutes ago, we had the French Manufacturing and Services PMI, came out mixed, but still in that contractionary phase. But as much as it's in that contractionary phase, you would see that manufacturing PMI went from 45 to 46. So it's coming closer towards that expansionary phase, while services PMI has gone from 50 in an expansionary phase down to contraction. So not great news there. Now it's both in a contractionary phase. German to be released in 9 minutes, most likely going to come out in that contractionary phase as well. We'll look at services, but the bigger one will be manufacturing. And then PMI for the UK to be released at 4:30, together with the US at 9:45 p.m. GMT plus 8. Services PMI for the US 51.3, 51.2. Manufacturing looking to stay at 50. So it's right at that borderline level. And you see that it has been doing quite well, had a blip, and now you're looking for whether it's going to maintain that recovery. I think anything above 50 might bring about some dollar strength again. It is a lot of news. It is a whole bunch of red news, but I would say that it's not massive news. It's not at this time, right? At this time, it's not massive news that I'm super keen or super going to pay a lot of attention to, because PMI numbers at this point in time not going to affect prices or volatility too much. You can see that the French got released now about 10 minutes ago, and the euro only dropped that much, right? The euro has only went down from 1.0826 or 1.825 down to 1.0816, so about 10 pips to the downside, pushing lower. So it looks PMI will be good for a continuation of trend. I don't think it will be anything like a counter trend reversal kind of news, right? So, and then with that through to tomorrow, we have retail sales for the UK at 2 p.m. GMT plus 8, while we end the week tomorrow with consumer sentiment for the US looking like it might improve slightly. Now, with all that said, looking at the charts, I would come back to this point and say that, let me change this, move this around, okay, and say that today is the 23rd of May. Dollar index is pushing up, needs to break 105 resistance to trade up to 105.50. I'm looking at upside on the dollar. So what we spoke about on Tuesday, expecting it to break that level to hit lower, it didn't happen. Now we're looking for it to break to the upside. Might be New York session will be volatile, London will be quiet, most likely. Right, so I'm looking at this pushing up. I'm even considering the possibility that it could go higher towards 105.80, but I think for now, 105.50 would be a reasonable level to look out for. Okay, so we're looking at dollar strength to push it up. Well, dollar strength to resume, to continue, to break out of that triangle to the upside. Then, with that said, that did not trigger, take that away. It's been sitting in this range. It's been sitting in this range between about 6080.85 and 6140. So it's been sitting in this range. I think what would be reasonable would be to look for it to break the trend line. Let me see. Look for it to break the trend line together with that support level. Right, look for it to break this trend line and the support 38.2 and to look for it to trade down on dollar strength 6065, stop loss no more than 30 pips, take profit. You could go down to 80 to the downside. Not so much because of that. I think we don't need that. Take that away. More because of that swing level. Could you go a little bit higher? I would say even 670 would be reasonable. So I'm considering this whole point here as a bit of a interim support. So I would look for that. Okay, so to break out of this horizontal move and trade down, breaking that support 6065, 30 to 70 to the downside for the Kiwi dollar. So looking at dollar strength, we're looking to sell at 0.6065, stop loss 30, take profit 70 to the downside. Okay, on dollar strength. Then onto the Aussie. We were looking for this to test and bounce. It did push up slightly. If you got into that, it would have hit your 25 pip stop loss. That's part and parcel of it. Didn't work out on that double bottom. Did break that support and traded lower. Now at this point, let me see, take that. That's broken that trend line. All right, so it's broken the trend. Look at that trend line there. Started on the 19th of April, bounced off on the 1st of May, and again on the 14th of May. Now broken down that support and the trend line on the 22nd, looking like it might push lower. Take that away. Let me see. This point here. Okay, take that away for now. Test this. That 61.8 is broken. And it's right at that point here. So this move up, we're seeing that 61.8 being tested, needs to break to get down to this point. Would be a very small trade, would be a relatively small trade here, relatively. If it breaks down, it's going to sit there for a while. 6610. The take profit will only be about 50 pips. Your stop loss would be 20 at the best. So breaking that trend line, breaking that 61.8 level, trading down towards that previous swing level down here. You're looking for that to trade lower. So 6610. We're looking to, on dollar strength, we're looking to sell at 0.6610. Stop loss 20, take profit 50 to the downside. It's sitting there, it's pushing back up a little bit. Let me just test something. It's come back up, tested 23.6 from this move. From this move, it's tested, it's just in between. I would say that it's going to sit here for a while, but you want to see, so it's going to sit here for a while. But you want to see it break down, then you look to get in 6610, 20 pip stop loss, 50 pip take profit to the downside for the Aussie would be reasonable. No major news for the Aussies coming up, so that's fair. Okay, I'm happy with that. Then on to the yen. I've been talking about trying to buy the yen up. Once I thought, maybe it's not going to go up anymore, it's going to turn back down, it starts going back up again. Now that it's pushed up, we were just talking about this with a couple of the guys in the office, and we're saying, looks like it's going to push back down. Right, it looks like it's going to push back down, but with the yen, you can never, it looks like it's going to push back down, but it always comes down a little bit before bouncing back up again. So it's something to watch out for. I want to adjust some of this. I don't think this should be there. Take away some of these dotted lines for now. That one's good. That one we'll keep. And that's a good resistance. That's a good swing. I would say that swing level would come down to this point here. Okay. So what I would actually be looking out for on the yen, all right, is if I don't want to sell it down. I don't want to sell it. It looks like it could come down a little bit, but it's not something that I think would be a good move. Okay, this is what I'm thinking for the yen, is that I would be looking for it to come down. I don't even think it'll come down to this point. I don't even think it'll come down to this point. So my thought process right now on the yen is that, one, if it goes past this point, could we sell it down here? Right, so that would be that move like that. You have a 20 pip stop, you have a 50 pip take to the downside. That could be the first move. Then I'm looking for it to bounce off this point. So I'm looking at a move like that to bounce off and hit back up, especially if we do see the dollar continue to strengthen. It's just a bit, you know, it's just sitting at that point there. That's why it feels like the yen is pushing a little bit lower, but you don't want to be caught halfway down. So what I would be looking out for on the yen would be a possible bounce from 156. So I'll be looking at 156.20, about a 30 pip stop loss. You have a 60 pip take profit back towards the high. Then if it pushes past this point, you can move that to break even, and then you can continue higher again. Yeah, I mean, Diana just said I would better go long, consider as fundamental expectation. I do agree, so that's why I'm looking for it to bounce off this point, or if it sits there, if it stays above this point, let me just draw a better line. If it stays above this point, right, if it stays above 156.50, then I would be looking for that, but I would be looking to buy it up if it breaks above 157. Stop loss, again 30 pips. Take profit this time almost 100 or 95 to the upside. So that's what I would be waiting for on the yen. Nothing right now. Either it's going to come down lower, bounce off this area, push back up, or it's going to sit around this point and then push back up. Then we'll look to buy it up. Right? Ultimately, looking for the consolidation to complete or the retracement to complete before buying it up. In this case, which do I prefer? I actually think I like that one more. I don't think it's going to drop that much. So I'll be looking at US yen. I'll be looking to buy. Again, now we're switching to very dollar bullish views. 157. Stop loss 30, take profit 95 to the upside. Is it going to be a straight up move?
quite possibly might hesitate slightly at 157.50, but I think it'd be an easy, could be an easy clearance. Okay. Then onto the pound dollar. I would actually like to keep this view. All right, it hasn't triggered, that didn't trigger, so we can actually drag it out to this point. If the dollar does push up, breaking and pushing higher, then we could see this break. So this consolidation, which we can drag it right across, so if I drag this just to draw this out, it looks like that, right? Consolidation here. And then we talked about this spike up, and then we're looking for that break again to the downside. So it's just dragged out a bit, dragging out the setup on the pound dollar, like how the FOMC is dragging out their timeline for the rate cut decision. And now at this point, I would look for that. Looking at this, oops, what am I doing? Looking at this like that, no point doing that. Keep this, push this up. You can see how it's come down here. I like that. Check. 61 is there. 38 would be right there. Looking at this, sitting right there. There is pound news on PMI later. 49.1, 49.5. While flash services PMI going from 55 to 47, 48, from 55 to 54.7, thinking that this could bring it back up. I think what we're going to see, what we'll possibly see, is the pound dollar sitting above this 1.27 level a little bit longer. Right? I think it's going to sit above this support level a little bit longer. As much as I would be looking to sell it down, I don't see it pushing down now. Maybe later tonight, maybe into tomorrow. All depends on what we're going to see here. In fact, I think what we might see here on the dollar is a test, reject, bounce around here before that. So not straight away. I don't think it's going to do straight away. It's rejecting that trend line, looking for the test, and then bounce back up again. So with that, we're going to sit around here for a while, but we're looking for it to break below 1.27. You need to be patient here. 1.269025. I would even go down. Once it breaks, it looks like it's going to be a good strong break to 85. Yeah, I kind of like that. Hey Pips Apprentice, how you doing? Hey Ayakame, good to see you. Okay, so I think I like that. What it means is that on the pound dollar, it needs to break 1.27, right? Then only then you'd be looking, well, break 1.27 strongly, obviously, because we're only looking to sell at 1.2690, stop loss of 25, take profit of 85. Take profit of 85 to the downside. That's what I'm looking for. Okay, I think the proper, oh, what did I do? No, wait, go back. Okay, wow, that was scary. what I actually need to say here is that likely to stay above 1.27. It needs to break. One to sell down. Yeah, okay, that's what I mean. That makes a lot more sense. So it's likely to stay above 1.27, waiting for it to break that support level to trade down 1.2690, 25 to 85 to the downside. Then on to the euro dollar, you can see that the news, the PMI numbers, French bit weak, we saw it drop. Now the German numbers came out at 45, so improving a lot better than expected, towards the expansionary phase. And services PMI getting slightly, ever so slightly away from the expansionary, further up. Expanding at a increasing rate, ever slightly increasing rate. So that's why we're seeing the euro dollar push up slightly. But I don't see it recovering strongly. All right, I don't see it recovering strongly, unfortunately. What it looks like is we have that at this point. You look for it to break, that point. I would say that you would look to sell down at 1.0790, a very tight stop at 20 pips, a take profit down to 60 to the downside. We are borderline towards being $2 bullish at this point. So I feel that there could be times where we could adjust this view or this bias, right? And it all depends on whether the euro is going to break this 1.08 level. If it holds and pushes back up, if it holds this 1.08 level and it comes down and does that, then we're going to see dollar weaken and a lot of the bias could change. But if it sits there and then it finally breaks to the downside, then I'll be looking for the dollar strength to continue. Then we could be bullish on the dollar right across the board. Okay, so euro, I'll be looking to sell down 1.0790, 20 to 60 to the downside. What am I doing? Why is it not working? Okay. We're looking to sell at 1.0790. 1.0790. Stop loss 20, take profit 60 to the downside. Well, it's sitting there right now. That's fine. So it's consolidating, but we're looking for it to break that trend line and that 61.8 level to trade lower. Then onto the US Swiss franc, did not do that, it continued to the upside. Now sitting along this resistance, almost turning support level. We don't need any of this. That midpoint, I'll keep that midpoint, but I don't need that. Doesn't tell me too much. I'll keep this midpoint and take that one away. We don't need that either. It's just in that big range, right? You can see that the US Swiss franc or the Swissy has that big support here at 0.9, has a big resistance here at 9230, and then in the middle it's just between that range.
I'm looking at this and I see a question, Diana. Let me get to that shortly. It's even if it bounces up from here, 9, 1, 6, 5, 25 to 60 to the upside. Yeah, continuation up. That's the most logical thing to look out for. The most logical thing to look out for. Hold that resistance, now turned support. Break up, bounce off to the upside, 9165, 25 to 60 to the upside. We're looking to buy at 0.9165, stop loss 20, take profit 60. No, what was it? 25 to 60. 25 to 60 to the upside. There we go. Diana's question is the EU might break that trend line and price will retrace back, so it might be good to trade from there. As in to trade up or to trade it down? Diana? I think that what's possibly going to happen, especially with the euro the way it is, yeah, so I'm looking for to trade down, but I think what could happen is breaking down, test this level, come back up, test that trend line, and then after that come back down again. Right, that's why I want it below this point at 1.07 1.0790. I want it to close below that point and then come back down again. So it needs to close below that point. It doesn't matter if it comes down and touches that, don't get in yet. I want to see the candle close below that point before you would sell it down. Yeah, so I agree entirely with that view, your opinion there, Diana. Okay, then on to USCAD. We spoke about that. That's done already. That bounce off that support has worked out perfectly. Right now, we do have that 61.8 and that swing level to contend with. Right, we have this point here to consider. It needs to break up on dollar strength, continuation. Dollar continuation to the upside is going to lead this to trade higher, which would be above 1.37. Give it a little bit of space, 1.3705, 1.3710. Stop loss would be about 25 pips. Take profit would be 50 pips to the upside. You're looking for continuation back up. That trend line is broken. We can take that one away, or has been broken, not that it's broken. Has been broken, and we'll take that away. Now, if we consider this as a level that, right, is tested. So if it breaks past this point, and we could see further upside. I like that view. Straightforward, relatively straightforward here on the US CAD. A continuation to the upside, 1.3710, 25 to 50 to the upside for the US CAD. We saw that test and bounce and back up. We've done that. Now we're looking to buy it up from 1.3710. Yes. 25 to 50 to the upside. 50 to the upside. Again, look at this. Very bullish. Sell Kiwi, sell Aussie, buy yen, sell pound, sell euro, buy Swiss, buy loonie to the upside. It's very dollar bullish. There, we cannot rule out the chance or the possibility that the dollar could break to the downside. Possibility is always there. Could it happen? Possible as well, but I am still more primed or more thinking towards the bias of that upside. If it does break down, then there will be setups like buying the euro back up could make sense. I wouldn't sell that down. In fact, I would be very keen on buying the yen up soon. Looking for this to bounce off to buy it up on dollar weakness could make sense. That's going to happen soon as well. So, or buying the pound back up. So if we do see that dollar weakness come back into play, I'll possibly be more keen. I would switch to buying the pound or buying the euro back up. You could also be looking to sell the CAD down from that 61.8 level, or the SWIZY to break that support and trade lower. So there are easy switch in bias or easy switch in setups if the bias changes. Okay. Then on to gold. We saw that push up. We spoke about this. Needs to stay above 24.10 to reach 24.50. It stayed above 24.10. It got to 24.30. Didn't get up all the way. And in fact, because of that dollar strength or recovery, it's slight recovery on the dollar, but a big drop on gold. It broke that trend line, broke 38.2, got down to 61.8, and it seems like it's pushing lower. At this rate, it looks like gold might be on track to come back down to test, or continuation back down to test that swing level, right? To test this point here. So I would say that gold below 23.50 could get to that 23.30 level. Okay, so gold below 23.50 could trade down to 23.30 level. Dinah is saying GU most promising to buy in case of dollar weakness. Yes, due to close above the support, I agree. Right, pound dollar to buy it up. Might test support and bounce if dollar weak. Yes, so there is that chance of this move on the pound dollar if we see the dollar weakness come back into play. Okay, it's still sitting right there. It's still undecided. If you are rushing into any trades, possibly not the best idea. I'm going to be watching this chart. I'll tell you that, at the end of this session, I will be watching this chart. I will be watching this one. So I'll be watching the US yen and the Aussie dollar to the downside after this, because it's coming the closest to triggering a possible entry. Maybe not the 4 o'clock, maybe not this candle, but the next one most likely. All right, so with all that said, please remember, do help me out, click that like and subscribe button if you haven't already, and the link for the Discord channel is there. Do make sure you join us, and I'll see you all tomorrow, same time, same place. Take care now. Bye-bye.